So what's a good credit score for you to be able to buy a house? What's up, y'all? My name is Tomy Boboy, back with another video. Today I'm going to be talking about what score you actually need to be able to qualify to buy a home, right? For you to be able to get a home mortgage to cover the loan on a house. So if you're looking to buy a home anytime in the future, then this video is going to tell you exactly how a credit score is calculated and how to make sure you can go about getting the best rates whenever you do try to qualify for a home. So before we jump into the actual requirements for the loan, I did want to stop and quickly talk about what is a credit score. You know, a lot of people think that your score is just one number that everyone uses, when actually your score is completely different depending on what company it's coming from. To give you an example, first off, you got to think of your credit report as kind of like a report card, right? I like to look at it is pretty much the adult version of a report card, right? That's what we get graded on, our financial responsibility. You know, banks are using that to basically grade us on how we've been doing financially throughout our life, or at least within the last 7 to 10 years. So now whenever it comes to actual credit scores, there's actually a lot of different companies that are calculating your score, your credit report. They're taking all the data from your credit report and using it to calculate a score differently, right? So there's a score called a Vantage score that actually comes directly from the credit bureaus, and that's the score that you're probably seeing if you have, for example, like a Credit Karma app or any of those free apps that are giving you your credit score. They are typically just pulling what's called a Vantage score. Now the issue with that is that no one is really using the Vantage score right now. Companies, for example, banks, if they're giving out a mortgage or even giving out a car loan, they're using a company called Fair Isaac Corporation. And what that company has created is what's called a FICO score. And that's typically what most of the companies are going to use whenever they're trying to run your credit and decide what score you should receive for your credit report. Now, the way your FICO score is calculated, it really puts your credit report into, it breaks it down into 5 different categories. The first category is going to be payment history, and that accounts for 35% of your score. That basically just means, you know, they want to see that you're making payments on time. It just looks at how often do you make payments, have you missed payments before, things like that, right? It also going to take into account any collection accounts that you have, because again, that has to do with you making your payments. And that's going to be the biggest portion of your credit score, right? The second portion is going to be your credit utilization. That's going to account for 30% of your score. That pretty much just comes down to how much you're using your credit cards. So if you're maxing out your credit cards, then you're going to lose a lot in this category of your credit score. But what I typically recommend is, if you're getting to a point where you want to actually go, you're looking to get a loan for a house, then you want to make sure that you're paying down your credit cards and everything, and you pretty much have low, if not no balance on those credit cards, right? And that's going to be able to quickly boost your score and get you a lot of points in that 30% bracket. The next 15% of your score is going to be what's called the length of credit. So pretty much all this is they look at how long you've been, pretty much how long you've had credit, right? So this just gives them an idea. You know, like if you have a credit history that's really short, then it's not really, it's not giving a clear picture of what you would do in the long term, right? And I think this is very crucial, especially for people who are trying to get home loans. You know, you're gonna have this loan for 15 to 30 years, maybe even longer if you're refinancing, things like that. So they want to just make sure that you've at least been consistent for a good amount of time, right? So this is going to equate for 15% of your score. The next 10% of your score is going to be what's called credit mix. All this really is they just want to see that you've had different types of credit on your actual report, right? So that's going to be things like credit cards. Maybe you've had some sort of installment loan, which can be an auto loan, a personal loan, things like that. You know, they just want to see that you've had at least a different mix and you've dealt with different types of credit. And the final 10%, and for some reason, this is the 10% that everyone wants to focus on so bad, right? You know, you always hear people talk about this, and this 10% is going to be credit inquiries, right? Everyone's always trying to figure out, how can I remove my inquiries? How can I remove my inquiries? And if you're in that same situation, I shot a video that's kind of breaking down your credit inquiries and when you should deal with credit inquiries and when you shouldn't. So I'll link that video down below. But again, that's only going to be 10% of your score. So that's going to be pretty much, that's the complete breakdown of your FICO score. So now you're probably wondering, what FICO score do you need to be able to qualify for a house? So depending on when you're watching this video, it does kind of change depending on market conditions or like what's going on in the economy. But typically the smallest score allowed would be a 620. So if you had at minimum a 620 credit score, you'd be able to qualify for a home. Now, that's not to say that there haven't been people who have been able to get it at lower credit scores, but as a benchmark, you want to try to get to at least a 620 before you actually try applying for loans. Now, guys, I do want you to keep in mind that if you want to qualify for the best rates and the best rates on any loans, so you want to make sure that you're getting really good interest rates, then you do actually want to get even higher than the 620, right? So if you want to qualify for the best rates, typically you're going to want to be in a 720 and above. I typically say if you can get into the 750 range, then you're pretty much going to qualify for the best home, the best interest rates, even when it comes to any type of loans that you're getting, whether it's an auto loan, a car loan, get approved for pretty much any credit cards that you'll need, things like that. Now, for those of you guys who are more focused on just getting approved for the loan to begin with, I do want to say that I actually did try to do the research on it and see exactly what happens, what would happen in terms of like even monthly payments if you were to apply for the same exact loan. And the only things that would change was your credit score. That was it, right? So all that would do was change your interest rate. So what I ended up doing was I calculated exactly how much you would pay in monthly payment on a $300,000 home, right? I didn't change anything. It was a $300,000 home, the same down payment, but the only difference was that the interest rate was changed based off of what the benchmark interest rates were for having the best credit or having the lowest credit possible to actually still be approved for the loan. And just by doing that, and I'll throw the information here above, but just by doing that, I was able to see that you would be paying an additional $900 a month, right? An additional $900 a month on the exact same loan as anyone else who bought the same $300,000 house, just if you had bad credit instead of having good credit. Like literally nothing changed. It was just what the person's credit score was. And it should tell you enough that if just by you pushing it and instead of just stopping at 620 FICO score, trying to get to the 750 FICO score, you would literally be able to save an additional $900 per month, right? In this scenario. So this is definitely something that I want you to think about. People, I think there's a lot of times we don't really realize how important a credit score is until we're in a situation where we really need it or we're kind of shown the numbers. And this is kind of why I want to make sure that you guys see the potential that it has, right? Think about what you could do if you had an extra $900 in your pocket. Now, I do want to give you guys just 3 quick tips on what you can actually do to fix your credit, right? If you're in a situation where you need to improve your credit quickly. Now, number 1, the first thing I will recommend that you do is pay down your credit cards. I mentioned it before, but I'll mention it here again because I think it's such an important point. Guys, if you have a bunch of credit cards that maybe they're maxed out or you have really high balances on them, then before you apply for a house, you want to make sure that you are paying down those credit cards. Again, that counts for 30% of your score, right? How much balance you have compared to your credit limit. Okay, so you want to pay it down so you are using less than 10% of whatever your credit limit is. I typically recommend go even lower if you can. If you can pay off all your credit cards before you're applying, then I think that's probably going to be the best bet for you, and it's going to help you be able to just get a lot better rates and just be more likely to get approved, especially if you're getting close. You know, you're not yet at the 620 score, but you're kind of hovering around it. That's going to definitely push you over the edge. The second thing that you can do is negotiate with any debt collectors if you have any type of collection accounts on your credit report. Now, what I'm going to do is I'll link below a video I did telling you about how to get rid of debt collection accounts on your credit report. I'll link that down below for you guys to watch that video. That's going to show you how you get rid of those collection accounts because those things can really bring down your score. So that's going to be the second best thing you can do is get rid of those collection accounts. And the third tip that I'm going to give you is not missing any monthly payments, especially if you're going to apply for a home or you're planning on getting a loan for that house. They want to see that you're making your monthly payments. It's definitely not a good look if you're asking them to give you a loan for a house, but you miss your credit card payment every other month. and you know you have a car loan that you miss every other month, things like that. You know, those are things that they're going to look at that's not going to shine a good light on how you handle your finances. So what I typically recommend is, especially when you're getting to that point where you're going to start applying for that loan, you want to make sure that you're not missing any payments, right? Just keep paying your payments, keep paying your payments. If it's a situation where you think you're going to miss a payment, what I typically recommend that you do is reach out to the actual company. They're going to be a lot more appreciative of you actually reaching out and saying, hey, look, I got a situation. I'm having a little trouble making this payment. Is there any way I can pay part of it and pay the rest later, or can we work something out? You know, they're going to be a lot more open to that than you just completely disappearing, right? You're not reaching out to them or nothing. You're just missing payments or sending you letters. You're not answering, so on and so forth. So definitely try to reach out to them, to any type of creditors that you have that are trying to get you to pay off any type of payments that you have for that month. And yeah, that's going to be pretty much it, guys. You now know about your credit score and how you can go about making sure that you're qualifying for a loan, and you're able to qualify for a loan at the best rates for any type of home that you want to get. So guys, that should be enough for you guys to get started. If you have any comments or questions, throw them down in the comments box down below. Other than that, guys, make sure you throw a like on this video if you thought this information was valuable, and be sure to subscribe to my channel, as I'll be posting a lot more information like this to help you be able to fix your credit and get you where you're trying to reach, whatever financial goals that you're trying to reach in your life. All right, so that's going to be it for this video, guys. I'll see you at the next one.